Hi all. So Tesla announced its Q3 earnings just last week. It posted record revenues, launched new vehicles, and doubled down on AI. But is it enough to justify Tesla's sky high valuation? So in this video, let's break down the Q3 results 2025 and understand what it really means for investors. First, look at the financial performance. So revenue $28.1 billion. It's up 12% year on year, and it's up 25% quarter on quarter, and it has beaten street estimates by about 7%. uh, Having said that, profitability is a bit disappointing, and that's one reason that the stock did not really rally after the results. So street expected an EPS of 54 cents a share. However, the EPS came was 50 cents, so that was a miss. A primary reason being automotive margins. They were down. They were 15.44%, so they were down quarter. They were down year on year. And also, Tesla had very high operating expense due to investments in robotaxis, FSD, the newly launched, not newly launched, but continuing AI chip program. They're also working on entry into new markets and continuing to give ESOPs for talent retention. So those have been stated as primary reasons for operating expenses being high. The good news, however, the free cash flow from the quarter is $4 billion. It is a new record. So Tesla is now sitting on cash and investments of 41.6 billion, and that's one reason it is able to do big investments in AI. Energy storage deployments for the quarter is 12.5 gigawatt. That is also a record, and it's a massive 81% growth year on year for energy storage deployments. And this business has been growing silently, right? Although it, it's not like big hype on the business, but it's a material part of overall business now. It accounts for 12% of total revenue and a massive 21% of overall gross profits. So all in all, Tesla's top line is impressive, especially after two weak quarters. Having said that, the margin pressure and the rising costs are still a concern. Now, next, if we look at the new product launches in this quarter, so there have been total of three new launches in this quarter: Model YL, Model Y Performance, and Model 3 Standard. YL is a six-seater SUV. It's primarily targeting the buyers in Europe and China. Primarily, it expands Tesla's footprint in the mid-premium segment. Next is Model Y Performance. That focuses on, as the name goes, performance, 0 to 60 miles per hour in 3.3 seconds. It reinforces Tesla's performance brand. And third one is Model 3 Standard, which is targeting affordable vehicle segment primarily in US, which is the largest market for Tesla. And most importantly, in terms of robotaxi, although robotaxi was launched back in June, but in this quarter they have really expanded the robotaxi in Bay Area and Austin area, which are the two primary geographies where robotaxi operates. In Austin, especially, they have tripled their fleet and the coverage. And Tesla said that they plan to expand robotaxis to 8 to 10 cities by end of the year 2025. So that would be exciting. In terms of robo taxis, a few more things which are exciting, that they have done 1 million supervised miles for robo taxis and 250,000 unsupervised miles. Now, what is the difference between supervised and unsupervised miles in terms of robo taxis? So, supervised miles are when these robo taxis have safety drivers in it. So, supervised miles is in when safety drivers had to do something, that is supervised miles. Unsupervised miles is, Tesla calls it that the vehicle is operating totally anonymously. The safety driver is present, but there's no intervention at all by safety driver. So that's your unsupervised miles. Unsupervised miles are particularly important to get regulatory approvals for removing safety driver in future. And Tesla's goal is to remove safety drivers by end of 2025. I'm sure it will be state by state, area by area, but that's what they are targeting. Like, so that seems like very soon. And once that happens, as per Elon Musk, it will take off like a shockwave. So that would be exciting. Let's see how that goes. Another interesting thing in robotaxi is, and overall. I think not just robotaxis, but in FSD itself. They're planning to bring in a Grok companion. So, they want to integrate Grok, the conversational AI, into robotaxis, and I think normal taxis as well. I don't know, but yeah, robotaxis for sure. It will enhance user experience and autonomy. So that's something which is very exciting, and we'll see how that pans out. Now, apart from robotaxi, the big thing is humanoid robot, the Optimus. So Tesla announced they are working on version 3 prototype, which is expected to come in quarter 1 of 2026. And Elon said that this could be the biggest product of all time, and they are targeting 1 million units a year production line by end of 2026. So next year certainly will be very, very exciting, and Wall Street seems to be very, very excited about this, because this is a totally new thing, not just for Tesla but for the entire world. The humanoid robots. Apart from that, in AI chips, Tesla has partnered with Samsung and TSMC to build AI 5 and AI 6 chips. These chips will power both robotaxis and Optimus. And with this, Tesla's AI stack is becoming vertically integrated, puts them in really unique position compared to any other automaker or most AI companies. Now, why should investors like us be excited about Tesla? Because Tesla is a lot more than a car company, right? It's all about robotaxis rather than automotive. It's about energy business, which is growing fast and highly profitable. It is about potential of Optimus, which could be huge. So robotaxis and Optimus, they certainly could and mostly would unlock entirely new revenue streams for Tesla, and that's what excites investors like us. Having said that, some caution which as investors we must be aware of. Firstly, there is margin pressure from price cuts, removal of EV subsidy, and tariffs, and overall uncertain global environment. So that certainly is a risk, albeit I'll call it a short-term risk. Valuation remains expensive. So Tesla is trading at a whooping trailing P of 300 and forward FY26 P of 200 plus. So that's certainly very high for a company which is having a market cap of over a trillion. But that also shows you what sort of potential investors and Wall Street sees in Tesla. The FSD adoption is still low, 12% of the fleet, but that also means there is a huge room of growth and improvement in that. Robotaxi, the regulatory hurdles for autonomy is definitely to be seen, and it remains a risk, because truly autonomous robotaxis at scale is yet to be proven. We still have robotaxis launched, but they are there with safety drivers, so it's not really autonomous as such. And Optimus, well, it's more or less in the lab right now, so it's not a proven product. It is a potential product, but not a proven product. So that is something to be aware of for us as investors, and to be conscious of. Now, management guidance. So management is Tesla management, which is primarily Elon. They're targeting 3 million vehicle capacity in 24 months. So the current capacity is 2.35 million. So that's about 26-27% higher than the current capacity in 2 years. So which we are talking about 13% year on year growth, which, I mean, it's good, but it's not really exciting for me to give a P of 200 or 300. But again, we aren't buying Tesla for its car business. So yeah, so it is good to know that that's a plan of improving capacity, but certainly not for the premium which we are paying for buying Tesla today. Capex guidance, $9 billion in 2025, primarily into cybercab construction in Texas, Tesla Semi construction in Nevada, Megapack 3 storage, capacity expansion in Houston, and Optimus robot production line. And overall focus will be on scaling autonomy, energy, and humanoid robots. Now, so that was a wrap. All in all, I would say it was a strong quarter 3 for Tesla. A clear and bold focus on autonomy, AI and robotics. Valuation is high, but I am excited about the long term vision against any near term execution risk or valuation. If Tesla delivers on autonomy and robotics, it could redefine multiple industries or rather create new industries. So that's something to really watch out for in the upcoming quarters and in next year as well. So that was a wrap for Tesla. Until next time and next topic, take care and I'll see you soon.